All right. Uh, yeah. Hello, everyone. We're back. This is the Future of Derivatives podcast. I'll have Rosalie handle it. But yeah, nice. Great for you guys to join us.
Hi, yeah, I'm Rosalie. I do marketing at Panoptic. Welcome, everybody. We are joined today by Jeff from STS Digital. So it's a pleasure to have you on our podcast today.
Thank you. Thank you. Pleasure to be here.
Yeah, before we get into all the questions I've prepared, I wanted to kind of get a little bit of your background. When did you start getting into DeFi? Where do you work? How have you kind of evolved in your journey? And yeah, let us know a little bit more about
Sure.
yourself.
Sure. I am from a traditional finance background, so I traded currency options for about 15 years from the sell side, and fell down the rabbit hole in crypto pretty early. It's a natural parallel coming from FX into what is Bitcoin. Bitcoin is an alternative money here, and it's something that kind of we really grasped quite early. Unfortunately, I didn't make the move to crypto professionally early enough. But I remember 2017 sitting on a dealing floor, and nobody was talking about what they were actually supposed to be trading. Everybody was just talking about crypto and talking about Ripple and Bitcoin and ETH and everything that was going on there. And so that was kind of the really start of when I paid very close attention to it. I'm a 2019 vintage professionally into crypto, um, and that kind of happened via options actually, because that was the start when Deribit and Paradigm really started to gain a foothold, and was one of the early traders onto there, and ended up friend of friends. We started a prop shop. As the story goes, HFT stuff, fell down the rabbit hole pretty deep there. Started trading a lot of options, started doing, in those days you could do cross exchange arbitrage almost by clicking and dealing, between OKX and Huobi and all that. And so stood that up. Post FTX, that world looked a lot different. A lot of those spreads came in quite aggressively. The It had just been institutionalized, and so came back to my first, my true love, which is options. And so now I'm head of trading at STS. We are focused on options, but we offer a slew of products, structured products. We trade a lot of altcoin options, and so yeah, that's why we're here talking today. Really feel strongly about options as a product, and just the incredible use cases that they have within crypto.
Wow, yeah. Interesting that you already started with options. I think that's great. You also mentioned altcoin options. I'm curious to learn more about that. But basically, how do you think institutions are trading today versus how they were trading maybe 18 months ago? I think derivatives and lending and borrowing, a lot has changed recently, as well as perps. And so I think there's more of a focus on derivatives. So, what have you seen institutions kind of change about the way they approach these instruments?
Yeah, absolutely. I think, just broadly speaking, liquidity in crypto options, I mean, in the majors in Bitcoin and ETH, liquidity is very, very good relative to what it might be in currencies even. If you think about, one of the higher beta, higher vol currencies in FX, the spreads that you get in that are very similar to what you'd see in Bitcoin. And yet the vol base is, a fraction of what it is in Bitcoin and ETH. And so because of that, it actually allows for institutions to come in and use Bitcoin as a tool, both spot and derivatives, to express certain views. Right? It is, historically at least, there are, certain, very attractive correlation factors there, higher beta. It's a very kind of margin efficient way to make certain expressions. And so one of the biggest drivers that institutions look for are, costs of hedging, counterparty risk, margin, what it takes to get, if there's liquidity in kind of displaced markets as well. And all of that is, surprisingly good. and has improved markedly over the last 18 months, 2 years even. And so yeah, we see huge adoption from institutions. We see real sizes going through OTC and exchanges. People are very active in Bitcoin. There's a lot of crypto tourists who use Bitcoin as a tool and use it as speculation. Guys who aren't crypto native at all coming in using Bitcoin to trade against, doing pair trades, doing it against, let's say, Coinbase, equity vol, or some more like just broadly index vol. And so it's a useful product, and it's not just, historically it was just crypto native firms trading on Deribit who were kind of punching around in there and doing some spreads and finding clever things to do as the curve maybe became dislocated or whatever it is. And now there's multiple venues. There's a lot of collateral kind of counterparty managements available, and so it's a real product.
And I
Interesting.
may add, so I'm using the ETFs a bit, and that also coincides, I'm sure, with the influx of liquidity that IBIT and also ETH.
Yeah, massively. The CME has been a big thing as well for crypto, and that's just helped. Even if you don't use the CME and don't use the ETFs, that spills over because then you guys get who do and run the ARB or run the basis and think about things like that, and that just brings more liquidity into the native product itself.
I think you're the first person who's come on here who says that there is a lot of liquidity. I usually hear people saying that there's not enough liquidity, but I'm happy to hear that. Do you think there's kind of a trend between what institutions are primarily using options for, like hedging or yield, volatility harvesting, or is it just kind of a little bit of everything?
It really depends. So we have quite a diverse client base at STS, so we see a lot of it from all sides. However, I think most institutions are using it as kind of a clever way to express a view still. I think that's the common one. Um, I think October 10th of last year really opened a lot of eyes and changed the market dynamics and made people realize, oh, there's actual value in using these options to express a view, right? We can't just sit long perps. That's been the case for a long time. I'm sure Guillaume has had this argument multiple times about why should I use options when I can just use perps, right? In October, we felt a very real sentiment shift across products on that date from guys who had been slow to move into options. Now I think options are just a margin efficient way to kind of express a view. If you want to get long Bitcoin and you want to take profit at 100, then you can just buy a call spread, and it's much cleaner than going out and trying to find somebody who you either if you can't trade perps, you have to do CFDs or you have to buy a forward off somebody or something like this. And actually options might be the most margin efficient, lowest cost way to do that, right? And so that's really how we see institutions using options still. More and more, some of the more advanced ones, like we trade a lot of exotic options these days on Bitcoin, so we are seeing real portfolio construction type of trades that kind of decay well. There's some really interesting things in the Bitcoin curve right now, and so there's clever things to do if you are a quote unquote volatility trader. And we're seeing more people come to the market to do that because it's still not, it's not an efficient market, as we know.
Yeah, definitely. I think we've kind of struggled with that as well at Panoptic and onboarding new markets. We recently had a SpaceX market as well, kind of trying to dabble into different markets. But we've just launched our RFQ system for perpetual options, which has been really, really exciting. Guillaume, if you want to talk a little bit more about that and maybe how that could change bringing more institutions onto Panoptic.
Yeah, exactly. I think the what Jeff is describing is very, very valuable, because sometimes the institutions, they come in, they know what they want, they have a directional view, and in the early days of options, they could not get their fill, or as you say, exit liquidity could have been a problem. So an RFQ system, or a way to kind of match an intent with a trade or liquidity, is extremely important. And this is also like how Paradigm's OTC desk kind of got so much traction. The sophisticated players, they know what they want, and if there's liquidity, they can scale 2, 3, 5, 10x. And as long as there's someone on the other side and it works, And at least in our side, being on chain, we were doing a lot of maybe a blind looking around about where to deploy liquidity. We had no way to transmit the signal from a user to the actual trader and the market maker on the other side. And yeah, the RFQ system is a way to make this quite easy to do. You can signal where you want to go, and anyone can come and fill it. And again, I'm sure that Jeff can talk about this. Is a lot of how trades are happening nowadays too. Like the bulk of the market sometimes in crypto is through OTC, through RFQs, and this is how you grow a market. And by the time you get to again ETFs and liquid venues, and now you can expand out more. So yeah, the RFQ system that we released last week allows this maybe new flow of the informed capital to come in and say, all right, this is what I have, this is what I want to express. And as long as there's someone on the other side, then it can happen. So this is extremely exciting for us too, for getting this, maybe putting a foot in the institutional side of trading options.
Yeah, I just want to jump in here quick. Signal is a great way to think about it with regards to RFQ stuff, because you get everybody's attention. You say, okay, this is what I want to do, but you still retain, your anonymity. But you cut to the chase and you say, okay, this is what I want. Who wants to price it? You're not beholden to price it. It's just whoever's there and can price it, wants to see it. Here you go. And it's the most efficient way to kind of bootstrap liquidity and to kind of get the market going, because then you print a ticket after it's done, you can show it, everybody sees it, they say, oh, actually I want to play in this game, right? It's a big lift to put up an order book or AMM, and we can talk more about the inefficiencies of that stuff, but an RFQ I think makes a ton of sense in crypto, especially in these nascent markets where there's not constant flow that happens every minute of every day and you're paying attention the whole time. It's kind of, maybe you get one trade a day and one coin. Well, then here's the RFQ, right?
For sure, yeah. I think you guys recently also announced a partnership with Metals.io and kind of thinking about RWA tokenization and enhancing a price discovery for the derivatives ecosystem. What do you kind of hope to get out of this partnership, and what problems are you guys hoping to solve, and what have you guys kind of seen shift now that there is more arbitrage and RWA tokenization, lots of new opportunities in the derivative space?
Tokenization is a buzzword right now, so I'm not just going to sit here and tell you RWA tokenization is great because that's what everybody else is saying. It is a very useful tool. I think about this from my own personal trading. I looked and tried to buy uranium, whenever this was, let's say 6-9 months ago, and there's no clean way to do it. These are very fragmented, very local markets. It's difficult to find a platform where you can trade all these things together. And Metals.io is doing a great job of bringing that, cleaning all of that up, all the back end workflow. You don't need to trade futures. You don't need to trade all this other stuff, and trade local markets and understand, what the difference is between different, nat gas ports are, things like that. Recenters everything and brings it to you, and now it's very clean. You can go in there and trade nickel, cobalt, uranium, whatever it is, and that lays the groundwork for a larger market and for growth in these markets. And then, as you can't trade derivatives on this stuff until you actually get a fully functioning linear market. And so these guys are doing a lot of work to put that together. These are very interesting markets in this macro environment, in this in this world right now. And so I think it's a very interesting use case, and it's something that we foresee trading options on this stuff in the very near future. We're very active in other RWAs, right? If you want to call them that. I mean precious metals. I traded for 5 years the precious metals book, so gold, silver, palladium, and platinum, and this stuff, we trade this now at STS, right? And so this is, just a further expansion of crypto going out and tokenizing, making it easy, doing what crypto does well. What its killer use case is making it accessible to the public, making it clean, making it, on chain, fully immutable, everything that you need to trade this and trust this market, and it's doing it for what have historically been very, very difficult markets to trade.
Interesting. Yeah. You guys are doing so many different things at STS? Um, how do you kind of prioritize
Oh,
what
that's a
you
good question.
do? Yeah, and like for inventory management as well. Do you guys look at
Yeah.
maybe gamma risk, vega risk, or do you just what else goes
I
into these
mean,
decisions?
prioritization is something I struggle with every day. There's just too much to look at in crypto. Anybody who trades crypto and is watching this understands the same issue there, that there's just too many blinking lights and too much stuff going on. I mean, if you think back to like the glory days of like minting NFTs, trying to get whitelisted for this stuff, do this, like it's just constant. You can sit in front of your computer for 20 hours a day and feel like you accomplish nothing, right? And so um, it's a real focus. You just have to have a thesis, think about what it is, its options, its tokenization of equities, of RWA, bringing all that stuff on chain. It's structured products for us, and those are kind of three big focus areas for us where we're really focused on distributing, and we've done a lot of education over the last 3 years, telling people, listen, options, you don't need to be afraid of them. Okay, it's a safe place as long as you do it intelligently, right? You have to understand a little bit, but they're a very, 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 very useful tool in this market. And so I'm a little on a tangent here, but like in terms of kind of how you execute, how you make money, how you prioritize. I mean, the most important thing there is really, where we make and lose a lot of money is the front end, like what I would call your delta or your gamma, right? And so that's kind of on a day-to-day portfolio management. It's really about what your position is in the underlying, in the linear, right? So your delta, and then how that changes is your gamma and theta. Right now, it's very quiet. It's summer. Everyone's watching the World Cup. So if you own a lot of options, it's been difficult the last 2 weeks because those have probably bled out a little bit. And so that is really kind of your reaction function or decision tree. Rotates a lot around your theta and kind of your day-to-day position management of what that looks like.
And actually, you said something. Let's circle back to this because you said there's too many blinking lights. There's so much stuff happening, and I feel the same way. But when you go and look, either crypto Twitter or the sentiment is quite down. Again, as you said, maybe the World Cup is taking people away, but I feel like it's like at the cusp of institution coming, tokenization. As you said, options are there, but everything is exploding. So how do you feel like the are we going to get consolidation at some point, or is it still going to be the Wild West for a while?
In terms of like what, the options trading, or
Yeah, I mean, I feel we're seeing so many things going on, and
yeah.
there's 25 perp dexes, and then
Oh yeah.
23 of them do RWAs. Like,
Yeah,
how do you see this evolving over the next few months?
sure. Yeah, I do. I mean, as you'd expect with any market, right? There's this like Cambrian explosion of stuff. It's very easy to spin up a perp dex. You can do it with a couple grand in a day almost, right? And Claude now especially. I've become a front end dev in the last 6 months. Claude's absolutely incredible. So it's not surprising to see this. I think there will be a couple of clear winners, guys who do it the right way. You also just have to get a bit lucky in terms of market timing. Obviously Hyperliquid has absolutely smashed it. Um, and so, yeah, there will be consolidation. It will be slower than people realize. Um, you look at all of these centralized exchanges that still exist. If you'd asked me 3 years ago if we'd still have this many, venues, we trade on 25 venues. I would have said it'd be a lot less than that by now. However, there's a lot of trading, there's a lot of arbitrage opportunities, and that kind of brings this volume. And so I expect it to stick around for a bit. Regulation's a big one in terms of how that evolves, and I think that when we have more clarity there, pun intended, it will be there will be some things that change in terms of who can trade what and where things go and stuff like that. It's very interesting. I mean, Robinhood has its own L1. There's clearly a lot of traditional finance players, fintechs coming into crypto space, and it will be very interesting to see who wins that battle and where that comes with the more against the more kind of crypto native exchanges.
Interesting. Yeah, I think earlier as well you touched on kind of the shortcomings of order books and AMMs. You know, we are a big believer in AMMs, and so I would love to kind of hear what you think the shortcomings are of AMMs for option tradings, and maybe Guillaume, you can tell him why he's wrong.
Now, listen, I'm a big fan of AMMs, right? Okay, I was a part of DeFi Summer. We manage a lot of liquidity, a lot of LPs money in AMMs. I think they're very useful. It's how I sell options if I'm getting given options and tokens that have no OTC or direct relationship, where I can't sell an option. Well, then how do I make money out of this option that is just bleeding? Well, I create an LP position in Uniswap or wherever in order to get trading fees and have it kind of trade the gamma for me, right? At its core, as Guillaume has taught everybody, an LP position is essentially a short option, right? I actually, back when Guillaume used to open source all of his Python code for how to break down, the delta, the gamma, all this stuff of what an LP position is, I stole that from him, right? Back when he put it on wherever it was, Notion, or I forget where he had it hosted. So it's AMMs are great, right? They're not going to go anywhere. They are going to exist. They're becoming more efficient. People are getting smarter about them. There are platforms like, well, yours. You guys have pioneered this idea of the fact that these are options, that these can be tradable, and there are two ways in this stuff. And so I think they're great. I think they're a very useful tool. I think order books on chain are useful as well. Very difficult. I think RFQ is great. And so each one serves a purpose. And I don't think any of them are actually going to get crowded out. I think that they will just continue to evolve, and there will be, use cases for each one.
I couldn't have put it better myself, but yeah, again, the AMMs to some extent, they serve in a way something that is needed. 24/7 trading, no need for having a data center instance. All of it can be automated market maker. And then yes, if you come in at it from the point of view of a HFT firm, it's highly inefficient, and you may feel like you're not getting a good deal. But if you come in from the fact that you can do all of it in a very passive manner, and you handle your position a few times a day as opposed to a few times every second, then yeah, it is going to be hard to displace. And it's a trade-off between everything, of course. And yeah, no, the view that we have is that it's an options protocol for it first, almost when you think about AMMs, and then the spot is just kind of that front-facing instrument. But yeah, no, I think the at least this is our bet that we're doing, and we've been kind of doing this for the past few years. But yeah, it's a mathematical certainty, and now it's the point of, can we actually market and create the traction that makes it now kind of equal footing with Deribit or CME in terms of options as well.
Yeah, for sure.
Yeah, I think you seem to be very, very bullish on institutions and liquidity and options and everything. I'm still curious to see kind of what you think is the missing piece, why a lot of institutions are hesitant. Maybe it's because of off-chain settlement, and we are trying to push everything on chain. What do you think kind of is missing for institutions, and what needs to change to get more options volume on chain?
I think the biggest knock on DeFi, something we struggle with on our side, is just liquidity fragmentation. So some sort of prime broker, some way to then make your collateral more efficient. If you sell an option on chain, generally speaking, you need to post full collateral for that, and that's difficult for institutions to do. Being able to then rehypothecate that somehow, borrow against that, do something there, would introduce a lot of systemic risk to the system. However, that is what makes it difficult to really trade at size on chain in DeFi, right? It's a little bit easier in order books where there's some sort of portfolio margin and stuff like, and tools that are open to you. because once you get away from that, if you do fully collateralized these fully collateralized options, you don't necessarily have counterparty risk. You have some smart contract risk, but you don't have the counterparty risk. Whereas then if you introduce facing an exchange where there is portfolio margin, you introduce that side, right? So it's a hard thing to get right. There's never almost a perfect answer. Even when you have an off exchange settlement or a third party, ACA, you still have counterparty risk facing the custodian, and we know that nobody's really truly bulletproof, and so it's not great. The biggest qualm with DeFi remains kind of fragmentation, as Guillaume alluded to earlier. There are 25 perp dexes right now. It is difficult to kind of cross margin a lot of these things and bring over collateral and do things like that. And so that's something that we struggle with on our side. We do see an improvement in this, right? We see things where you can post kind of yielding stable coins as collateral in places and make things more efficient and do some stuff there, but it just needs to continue to grow up, right? Which it will with time.
Very true. Yeah, I think we now having our RFQ system and our vaults. I'm not sure how much vaults can relate to structured products. I'm hoping to see with these automated strategies more institutions coming on chain. Guillaume, feel free to explain a little bit more about our vaults. I know our unicorn vault has been really successful, and I believe it's going to be the missing piece to bring more institutions on chain.
Yeah, exactly. And options trading, when people think about this, they think about Robinhood and GameStop and kind of that craziness. But it's a tool for risk management or a tool for expressing a view in a way that is risk control. And in Europe, it's quite popular. Also in Asia, structured products are where most options are traded. It's a product that packages a bond, an option, but something that is clear to the consumer. And when they participate, they can actually see the outcomes without having to manage again the data, the cameras, everything else that an options desk has to manage. So this is the best entry point that we can see for larger players, those that want to get exposure, want to get risk off, and get a way to participate into the options, the options trading world without having them to be 24/7 active. And our vault is a way to package this. You can actually create any strategy. You can follow the rules, and the it's like again the decentralized options vaults were something that got a lot of traction in 2022, 2023, and they had covered calls, which was the main one. But technically, we can do a lot more. And that vault that you're describing, which is we call it the unicorn vault, but any structured product taps into a specific inefficiency or a specific need for the users. And the one that we're tapping into is the volatility when you buy options now on Panoptic, or if you look at Uniswap, kind of the flow, it's quite cheap. You can actually buy options in a way that would be quite underpriced compared to the same option that you would buy on Deribit. And if you package this into a vault, you clearly state you buy options, you hedge, you can be during a positive yield just because that inefficiency exists. And we are able to kind of commoditize that trade and have this be what people can get exposure to. So the price goes up or down, whichever way it goes, you can kind of gain money or gain yield. And that is kind of one way to now equilibrate the markets. It's going to be it's cheap to buy now, so the sellers also are getting underpaid. So you can restore the balance a little bit. So it's almost like you do a you start with the foundation, but you build slowly, like block by block, what looks like a mature market by having a vault satisfy and fill each one of the holes that you see kind of along the way.
Yeah, absolutely. I think that's a genius product because I think the yield in these AMMs is not always does not mirror what the realized volatility is, what the fees are. It's not an efficient market, right? And so you guys are filling to the void, which is to say that bringing the market more into equilibrium. And so because of that, that's very, very, very real alpha. You can step in, buy some of these options off of these LPs because you trade it differently. Now, if you're an individual and you're highly advanced, you can do some of this yourself and figure it out. However, that requires a lot of work. And so these vaults are great to kind of stand this up, get this going, and show that there is, very real value in kind of doing some of these trades, trading on Panoptic, and backing that out versus the market. But to touch on your comment about structured products, that's a focal point for us, which I alluded to earlier. As Guillaume said, it's a mix of a bond and an option, and that is a huge growth area for us, that we see a lot of people stepping into the market, using structured products for loss limited, understanding what the outcome is. A lot of times options are scary because we don't know what could happen in the meantime. And what these do is kind of show you your defined risk, your defined benefits at the end. And there's a very real opportunity here to bring those on chain and to use those. As I mentioned earlier, with liquidity fragmentation, you can take things, yielding stables, yielding LP positions like Pendle or whatever it is, post those as collateral trade options. And those are building blocks to be able to create, a principal protected note or a buffer note, and you can trade options around those things. And at its core, any exotic option, for the most part, in options, are just composable kind of vanilla options. And you can create all that via Panoptic, via LPs, however you want to do it. But I really strongly believe that these structured products
will come on chain. All right.
Very cool. I think we lost your microphone is loud, but yeah, I think. But this is great. I think the vision almost, and this is what we always tell people, is that you mentioned this earlier as well. DeFi has to grow up. Again, we started with DeFi Summer with NFTs, pretty pictures. Now, if one institutions come in, we have to be ready and we have to be able to serve them with their needs. And then in that case, structured products, more, as you said, portfolio margining, cross margining is what we need to do to actually fully fulfill that goal of having all of finance move on chain. Like it's fine to tokenize some assets, but then if you cannot exceed what you can do in TradFi, then we won't see any mass migration of funds anytime soon. But yeah, very cool.
Yeah.
For sure. Yeah, I think we are out of time already, but it was wonderful to have you, Jeff, and thank you, Guillaume, as well. Or if you guys have any last thoughts, feel free to add them. But yeah, it was a pleasure to have you.
Thank you very much for can you guys still hear me, by the way?
Yes.
This is ending at a good time here. Thank you very much for having me on the pod. I'm a big fan of Panoptic, and it's been great chatting with you guys. And I think you're building a very clever product there. Wish you the best of luck in the future.
Of course. And any you from STS, anything you want to say about your product, or if people want to trade with you, what should they do?
Yeah, absolutely. Hit us up. Come, ping us on Twitter, stsdigital.io. Reach out. We have a fantastic portal. We trade 500 altcoins, vanillas and exotics, structured products, RWAs, whatever you want to do. Anything that has interesting convexity to it. We really try to be hands-on, firm, and work with you to find solutions for what you need. So.
Wonderful. All right. Thank you to everybody who is listening. I hope you enjoyed, and I wish everybody a wonderful day.